Hello and welcome to Credit Versio's Q&A Live Wednesday for September 29th. I'm your host, David Michalek, and over the past 9 years, I've conducted over 10,000 one-on-one credit consultations to help people improve their credit, and I'm looking forward to sharing with you what I've learned over those years on our live Q&A calls that we have every Wednesday on both our Facebook and YouTube channel. So please take a second, introduce yourself, let me know where you're from, and welcome if this is your first time joining me today. And if you've been here before, you've heard me say this many times. If you're new, then I hope this sets in real well for you. And that is that our credit report and scores play a significant role in so many areas of our lives. Our insurance company, landlord, mortgage broker, banks, even about 70% of employers are looking at our credit report to see how we honor our obligations. Having great credit is mandatory because credit reports have become a lot more than just credit reports. They've become our adult report cards. Another way to put them is our character reports. So that can cut deep for a lot of people. It did for me a long time ago when I had to go through the credit repair process about 9.5, almost 10 years ago. And our credit reports tell the story of what we do when we're entrusted with credit. And that's why we do these live weekly Q&A sessions. So thank you so much for being here. Now, during today's live broadcast, I want you to feel free to post your questions about credit reports, scores, the repair process, how to use Credit Versio. It is completely up to you. I'm happy to answer all of those questions for you. So this is going to be a free-for-all today. And first of all, let's welcome some of the regulars. Emanswell, thank you so much for being here. Appreciate you. Adrian, welcome. Keith Lynn, I hope I got that right. If I didn't, forgive me. So thank you again for being with me today. So I thought about what I wanted to start the broadcast off with today, and I wanted to make it really, really relevant to everybody who's watching. And the first thing that comes to mind is credit repair. The industry itself is in the process of going through a big change. A change that is probably going to put a lot of credit repair companies out of business. And I'm not talking about Credit Versio, although that a lot of people have joined Credit Versio. I'm talking about the CFPB, the Consumer Financial Protection Bureau. It is the agency, the government agency, regulatory agency that oversees everything in the U.S. that has to do with consumer protection as it relates to financial. And they are right now targeting the biggest people in the credit repair business. Now, this has nothing to do with Credit Versio. We're not a credit repair company, but they are targeting. If I were to name the names of the companies, if you're even slightly in tune with credit repair companies, you've done some research, you're going to know who these guys are. What's going on right now is the implementation of what's called the TSR. It's the telemarketing sales rule, or telemarketer sales rule. And essentially what that says is that a credit repair company cannot charge you until 6 months after they have finished the work. So it might take them 4, 5, 6 months to do the work, and then they have to wait 6 months before they can bill you. Now, doesn't mean that customers aren't going to be paying the credit repair company. They're going to be paying an escrow account. So the government wants there to be a third party in between the credit repair company and the credit repair client. Now, I'm not going to harp on this long. I wanted to bring this up because it's incredibly important to understand why the CFPB is going through such a drastic measure to do this. Because think about it. What kind of company can you imagine can do work for 6 months, not get paid, and then have to wait another 6 months before they can bill the client? So you can Google this if you want. It's called the telemarket or the TSR. Just look up TSR and you will see what's going on if you care to. The reason why I'm bringing this up is this drastic measure is meant to do something that the government has been trying to do for decades, ever since 1970 when they wrote the Fair Credit Reporting Act, and that is protect people from fraud. Unfortunately, the reason why the credit repair industry has the reputation it does is because it gave it to itself. There's a lot of bad actors in this area, unfortunately. Now, there's a lot of great people. I've been here almost a decade. I can rattle off the names of people who run legitimate companies that are above board and do great stuff. And then I have the daily conversation almost with people who said, hey, I just spent $3,000 on a credit repair kit from some guy standing in front of a Lamborghini or something. I have no idea who this guy is. But I can tell you one thing, nobody who is an expert, a legitimate expert in this industry, has any idea who these people are. They don't belong to the trade associations and the compliance associations that we belong to. They don't go to the seminars that we go to. They don't go through the educational programs that we go to. We don't know who these people are, but they're everywhere. So the reason why I brought that up is to impart upon you in a very important fact, and that is credit repair is not hard. Okay, I learned that I think second year in credit repair, like, wow, this is really simple. All we're doing is writing letters that say basic stuff, and that's it. There are no magical dispute letters. There's no magic strategies. There's no special strategies. Things get deleted from credit reports for really 4 reasons. One of 4 reasons. It's right there in the Fair Credit Reporting Act. It's been there since 1970. If the account is erroneous, outdated, incomplete, unverifiable. Now, a lot falls underneath that, but that is the core premise of why anything gets deleted from a credit report. Unfortunately, people really want to believe that there's hacks and special tricks and there's a cheat code somewhere. And unfortunately, it's not the case. It's not the case. If you're using Credit Versio, look at the letters. They're simple. The disputes are to the point. They're maybe 3 or 4 lines. It depends on what the dispute is. But they say only what needs to be said. They don't quote any laws because that's a bad idea. You don't need to quote laws in a dispute letter as if the bureaus don't know what the laws are. They operate based off of consumer protection laws. So my point bringing that up is empower yourself. You don't need to spend money to do this apart from a 3-bureau credit report. And that's not Credit Versio. It's whoever you chose to link to Credit Versio. You don't need to pay for education. I've got the #1 credit expert in the country that is on with me every other week. You can go to our YouTube channel. We have credit education free from people who know what they're talking about. I'm a certified FICO pro. I'm an instructor. John Olsheimer, formerly with FICO and Equifax. There's no mystery. It's all right there. Everything you need to know about how credit works is easily found on either on our YouTube page, our Facebook page. You can even go to Experian.com, myfico.com, and just spend a couple hours reading. It's all right there. There's nothing complicated about this process. Okay, so enough with my rant. I just wanted to share that with you because I wanted to start off giving you guys some really important information about the state of credit repair right now and why the government is making a concerted effort to hamper and largely put a lot of credit repair companies out of business. And by the way, this is a good thing. I mean, I don't want to see people lose their livelihood, but I want to see more protection for consumers. I want to see more honesty in this business. I wish a lot of the flim-flam stuff that's out there would just disappear overnight, but unfortunately, it doesn't work that way. Hopefully the government's going to assist with this. Okay. All right, Judy. Hey, glad to see you're here. Monswell with the first question. Do you need more than 1 credit card to boost your score with positive accounts? You know, yes and no. As long as you're using that credit card correctly, you're paying off your balance. And by the way, this is a conversation I had 3 times today. I'm answering the phones today because we got a lot of people on vacation, and Travis, who's usually here, is getting married, so he's on his way to the Caribbean today. So congratulations to him. And today I had conversations with people about their credit card. There's a lot of myth around credit card, like, oh, I was told I should leave a balance on my card. No, you don't. Case in point, had a conversation with a lady today, about 3 hours ago, couldn't figure out why her scores dropped about 90 points across all 3 bureaus. And I looked at her account. It was pretty easy to diagnose. She had 9 accounts with balances, 9 credit card, 9 revolving accounts with balances, small balances, $30, $50, $130. And it wasn't like that the month before. So she thought she had to put a little bit of a balance on all of her cards, excuse me. That's not true. That actually cost her 90 points. Now, she's on the right path. We had a good conversation. Also told her to pay her credit card off before the end of the statement date not the due date, because by the time that due date comes, that balance has already been reported to the bureaus. So she lost 90 points across her credit report because of having too many accounts with open balances and too high credit usage. So, Amanswa, to answer your question, as long as you got one card and you're treating it right, if you really need to build and you don't have a lot of credit history, you want to have somebody add you as an authorized user, then feel free to do that. Just make sure they're not maxing out their card or they're not carrying big balances on the card. That's going to help you out a lot. Okay, hope that answers your question. Adrian, I think, is there a way to figure out how much my 30-day late is hurting my score? It's 2.5 years old and all other accounts are positive. Scores are 7. Your scores are awesome, dude. Come on. Okay, awesome question. I love your question. The answer to that is, I got two answers, really. Number one, no. There's no way to know what, there's so many variables that go into factoring a score, literally hundreds and hundreds of variables. And what a late payment might do for you could be very different than what a 30-day late payment would do for me or somebody different. So FICO and Vantage don't really publish how they're factoring things like this. There's so many moving parts. Now, having said that, here's the second part of my answer, which is late payments really have a bite, really no more than about 24 months. So you're already there. And I mean, look at your credit score, 750, 748, 765. The thought that this 30-day late is negatively impacting you in any way is probably a waste of time. I don't think that it is. You can dispute it if you want. It's old. Maybe you'll get lucky. But I would not obsess over it. It's probably having little to no impact on your score whatsoever. It's old. You're getting past it already. Judy, oh wow, yeah. I'm assuming that's in response to the CFPB and the telemarketing sales rule. Deshaun, hey, good to see you. Thanks for being here. Looks like you got a question. If the current scoring models update your credit, does the effect happen on older models? Okay, so the way that, let me just make sure I understand this question. Let me just read it one more time. I have one question. If the current scoring models update your credit, does the effect happen on the older models? Yes, actually it does. Okay, so the way that it works, Deshaun, is when you get a new credit report. So credit reports and credit scores are not they're not the same thing. So you can get a credit report with no credit score. Go to annualcreditreport.com. You'll see what I mean. A credit score is an accessory, something that can come with a credit report. Now, depending on where you're getting your credit report, like for example, on my smartphone over here, I have Experian.com or Experian app, excuse me. And when my credit report, my new credit report comes in every 30 days or so, it will show me all of my different FICO scores and how they've changed. It'll also show me all of my FICO Model 8 scores across the board. So when your credit report updates, when your scores update, everything is being updated. So if you go to a car dealership, they're going to get a score that's applicable at that moment in time. So I hope that makes sense. If you need more info on that, I'm happy to answer it for you. Gregory Kennedy, first time. Hey, welcome. Great to see you. My question is, using Credit Versio, how many disputes can you do at a time? Okay, so two answers to this, Gregory. Number one, make sure you watch your tutorial videos, your quick start videos, because we actually cover this in detail. There's 4 videos. They're about 3-4 minutes each, and they'll walk you through how Credit Versio works. But to answer your question, put all of the disputes, all the accounts that you want to dispute go on one letter. Okay, so this is the first credit repair myth that I'm going to bust today. Let's see how many we do today, based on the questions that I get. A lot of people, and by the way, I believed this too a long time ago, and I'll tell you what happened during that transition, or what caused that transition. You can put as many accounts on your dispute as you want. The bureaus don't like it when you play games with them, meaning if you've got 10 items you want to dispute and you send 10 different letters. Okay, a rational person wouldn't do that. If I have 10 things that I need to talk about, I'm sending it to one place. Why wouldn't I just put it all in one letter? Okay, that's pretty common sense. When you start sending them multiple letters, they're like, hey, why is this Gregory guy not just putting everything on one letter? Is he trying to game the system? What is he trying to do? So that is something that a lot of people believe. I don't know if it's in the credit repair blogosphere or if it's in some book somewhere, but it has made itself out into the world, and people believe that they got to write things by hand, handwrite letters. Don't do that. Letters are read by computers these days. Very rarely does somebody ever read a dispute letter that you send in. It happens, but most of the time it's read by software. So don't handwrite. Typing's fine. Printing on your computer is fine. Got to write it in blue ink or put staples down the side. And there's all kinds of nonsense. And what got me straightened out is actually meeting a guy, and I've interviewed him on this live, a guy by the name of Steve Rieger. He worked at TransUnion for 25 years, and he spent the last chunk of his time there as the guy who was in charge of the entire dispute division for TransUnion here in California. So if you want to know what goes on in the bureaus, these are the guys to talk to, and we have extensively. So that's why we can give you the advice that we can give you on how dispute letters should look, what they should say, what they should exclude, because we're getting it from the guys who worked in dispute resolution in the bureaus. All right, Judy, love this channel. Love to hear it. Thank you so much. Glad you're here. I love teaching people how this stuff works. Okay, Amanswell. Also, David, where can we get the Credit Versio merchandise? I had this custom made. It's funny. I don't think people would ever buy stuff like that. I always think that it's silly. But hey, man, listen, if people want to walk around with Credit Versio stuff, maybe we should come up with it. But great question. I appreciate it. Keithan, all right. Is it legal for companies to sell your account to collection agencies? Yes, it is. In fact, we get that question probably once every couple of days. A debt is an asset. So let's say, I'll use a personal example for myself. As I mentioned here earlier, what got me into the whole credit repair industry, how I became an instructor, and how I gained a passion for this is I was one of those guys that I had no idea credit repair existed. I had no idea how credit worked, like most people in this country. And I learned a lot about credit by going through the repair process with a really, really good company. And one of the things that I learned is that, for example, a couple of things that were charged off of my account, one of them, I'll just use American Express. American Express, at that time, I owed them, I don't know, $6,000, $7,000. I can't remember what it was. This is, I was one of the guys that got plowed when the Great Recession. So this is going back a little ways. And what American Express did, they exercised their ability to sell that asset. Okay? They own that asset. If you sign a promissory note, you sign an agreement, a credit card agreement, whatever it is, you owe the money. You'll owe the money for the rest of your life until it's paid. Now, it doesn't mean they can sue you for the rest of your life. It doesn't mean they can put it on your credit report for the rest of your life. But they do own that asset. It's a real asset. So they sold that debt to a big collection company called Midland Funding. And Midland Funding owned that debt. So to answer your question, yes, it's perfectly legal for a company to sell an asset that they own. In this case, it's a debt. Just like if you ever bought a house before, and if you haven't, then you'll still probably understand the reference. If you buy a house and you get it through, you do it through Bank of America, well, Bank of America is going to bundle that loan up and sell it. And then your servicer might become, some other company. So they did sell that debt. It is an asset that can be sold. Joseph Weber. All right. Keithan says, thanks. You are very welcome. That's a big question. Let me see if I can get this. Hello, and thank you for your time. I did 4 rounds of disputes on a vehicle loan that I paid in full in September 2020. In that loan, I had constant late payments, 30, 60, 90 days late. So a 5-year loan had 24 late payments. I did a dispute proof of late payment. Woo! All right, hold on, Joseph. I'm getting through this. Late payments, and TransUnion said it was verified as accurate payment history. However, when I paid the loan in full, the credit union turned 60, 90-day late payments into 30-day late payments and said maybe was a way to make my report better. Okay, hold on. Would like account deleted. That was my goal. Okay, so Joseph, I can definitely sympathize with this situation. I've been through it myself with a mortgage loan. And here's the truth about the dispute process. And if you didn't catch the beginning of this, there's really only 4 reasons why accounts get deleted. Either it's erroneous, outdated, incomplete, or, this is usually the magic one, unverifiable. What happens when you send in a dispute is the data furnisher, aka the creditor, is obliged to respond under the Fair Credit Reporting Act. And they have to do certain things. Verification, they have to look at the information to be sure that it's reporting accurately. If they come back to the Bureau and say, yeah, everything is on the up and up, here is our documentation, they send that over electronically to the Bureau, then it's a real account. It's not going to be deleted. Just because you dispute it doesn't mean it's coming off, and even though we hope that things come off, but sometimes it doesn't work out that way. Now was this a repo? No, it looks like you just had a lot of late payments. The more time that you put between this loan and you, the easier and the faster it is to recover it. So even though they might have removed some of the late payments, does that help? Maybe, maybe not. I mean, at a certain point, if you've got 10, 20 late payments, then it doesn't really matter anymore unless they're all like 30s and 60s. 90-day lates is where you have a real problem because that's considered to be a serious derogatory account, 90 days. So if it's 30 days, 60 days, and it's getting older, yeah, that might have helped you a little bit. But you really don't, unless it's a repo, you really don't want that account to fall off your credit report because it's good credit history. The late payments you'll recover from over time. So hope that makes sense. If you want me to expand a little bit more, if you have some more questions on that, please let me know. Adrian, can you please go over some of the key differences between FICO 8 and 9? I've noticed a lot of people, including myself, have higher scores on FICO 9 on average. One of the biggest differences on FICO 9 that I've seen is that just like anything else, it's like asking the question, what's the biggest difference between, this Note 9 and whatever they got today? I don't know. I don't think they even call them Note 10 anymore. I think it's something else. But largely it's just software. Software's ability to be predictive. That's really all that happens when you go from a FICO 8 to a FICO 9. Now, FICO 10T is a different story altogether because that's using trended data, and if you want to know about that, I can go into it. But I don't see FICO 10T being used anywhere as of yet. It's out there. I don't know how many creditors are adopting that yet. But the reason why, if there is any score increase, and you also have to consider, Adrian, that there are people who probably have score decreases with a FICO 9 score. So it wouldn't be factually correct to say that everybody who's looking at their FICO 9 versus FICO 8 is going to see an increase unless they have a certain behavior that indicates that they are lower risk. So every time an iteration of FICO comes out, they get better at their predictive ability. So what are they trying to predict? What are the chances that you will have a major derogatory event? And if you remember from a second ago, I defined a major derogatory event as a 90-day late. What are the chances of you having a 90-day late in a 24-month period of time? That's what that score is designed to indicate. So difference between FICO 8 and FICO 9, FICO 9 is probably doing a better job of its predictive ability. So for you, good news. What it did for you is, because it's able to parse out details a little bit better, it looked at you as a better risk. Now, it's not going to be that way for everybody. So as far as, are there major components that had changed from FICO 8 to 9? Not really. There are with FICO 9 to 10, which is trended data, and that is looking at really more how you pay your installment loans. But I can get into that a little bit later on if you would like to know. Okay, all right. Keithan said thank you. Joseph Weber with a follow-up. Glad to see that's a little bit shorter. So currently this account shows all my late pays as only 30 days late. However, I had many 60. Hey, listen, the fact that it's just 30-day late is a really good thing. If they eliminated 60s, which is okay, but that there are no more 90s, that is a big, big improvement. That's a win. That's a really big win. 30-day lates, maybe 24 months, worst case scenario, maybe 36 months to recover almost fully from them. But again, so it's really important, Joseph, to understand that recovery means that you're putting distance between yourself and derogatory credit, and everything that you're doing now is positive. Okay, you're paying off. You don't carry credit card balances. You certainly don't want to carry balances across multiple accounts. Just had that conversation earlier in this live broadcast that I had a lady who I talked to today, lost 90 points because she was overextending her credit, and she had balances on, I believe it was 9 different revolving accounts. Tanked her score. So bear that in mind. That part of your score is 30% of your score. You got about 165 points sitting there. Now that's FICO. Vantage is not much different. They have slightly different ways of factoring scores, but it's not much different. Okay, Gregory, not to ask a dumb question, but what do you mean put it on one page? Do you mean print it all out? Oh, I see what you're saying. I'm sorry, I meant put it on one letter. So you can have a 2, 3, 4, 5, I've seen 10-page dispute letters that include all of the disputes. So no, I don't mean put all of your disputes on one page. Sorry about that, I misspoke. So put all of your disputes in one letter. So you're going to send one letter to each bureau if you are sending disputes to all 3 credit bureaus. I hope that is providing you some clarity. Okay, not a dumb question. I provided an unclear response to your question earlier. Keisha, can small businesses build credit? Yes, they can. That's not really my area of expertise. I have a good acquaintance of mine that owns a company called, what is it called? Oh, jeez. You know what? I will, as soon as I remember it, I want to say Credit Suite. I think it's creditsuite.com. Ty Crandall. Okay. I don't know why I couldn't. Hey, this is getting old. Okay. I'm 51 years old. I'm starting to feel it sometimes. I got to really recall things. Ty Crandall, Credit Suite. We have no affiliation with him whatsoever. I've just known him for many years, and he helps people build business credit. So not my cup of tea, but it is his. All right. Let's see. Judy, do you believe? Yep. Okay. Very good. Keisha, nonprofits rather. Again, I'm not really my area of expertise. I apologize. Is FICO 10 the game changer? Deshaun, it can be. I'll give you a little bit of a preview of personally why I love FICO 10T. And also, by the way, Vantage 3 and 4 also do trended data. So here's what this means. It's really looking at how you pay off your revolving credit. Are you a transactor or are you a revolver? So the difference between the two is this. You charge something on your credit card, you pay it off. That's a transactor. A revolver is you charge something on your credit card, you pay a little bit down, but then you charge some more next month. So your balances are going up and up and up and up, or you're just not making a big dent in how much you owe. So the difference between the two is significant. The person who charges, I don't know, $1,000 on their card one month and then pays it off is a much lower risk than the person who charges $500 on their card and then pays the minimum payment, then charges $50 the next month and makes a minimum payment, then charges $400 the next month and makes a minimum payment or a small payment. So the bureaus are actually, I'm sorry, not the bureaus, FICO and Vantage are now able to track that kind of data. How do you pay off the balances on your credit cards? The reason why this is so important, and probably you watching this, you're going to understand this. If you have high credit card balances this month, it can tank your score. But if you paid them all off before the end of the statement date, and then you get a new credit report, say a month from now, and all that's paid off, your credit score will jump. And unfortunately, that's a flaw in the way the math works. It's not able to calculate how you're paying your balances over time. Where trended data, FICO 10T, and especially Vantage Score 4 is able to do that. It's much, much more predictive. It's and if you're that person, like a lot of people like myself who's a transactor, meaning I don't carry credit card balances, that's going to probably provide a little lift in score. Now, for somebody who is always running a balance and not paying things off, they're either staying the same with their balance or slightly creeping up every month, they're probably going to see their score go down because they are higher risk. Okay. Great question, Deshaun. Hiram, what is the difference between an active closed by grantor account with balance versus a charge-off? Big difference, actually. So a closed by grantor, all that means is that they just close the account. This is something that happened a lot, maybe a quarter into COVID. Because what happened is when everything started shutting down and people were getting laid off, about 25 to 30% of the entire U.S. population saw one of two things happen. the grantor, the credit card grantor, closed their account out, mostly accounts that weren't being used, haven't been used in a while. Or two, they saw their credit card usage or their limits reduced. So credit card companies, issuers were doing this to mitigate their possible loss during a time where there was high unemployment and a lot of uncertainty in the market. So if the grantor just closed the account, just means the account's closed. So I mean, there's some minor, possible minor, drawbacks to that. Like you no longer have that line of credit that's part of your credit utilization rate if we're talking about a credit card. But if we're talking about a charge-off, that's complete default. That does a tremendous amount of damage to your credit report. That is essentially having a debt that's owed and not paying it, and it goes into default. And you normally see like 30, 60, 90-day late, maybe a hodgepodge of late payments until you see that CO, which is a collection charge-off. So yeah, big difference between the two. Okay. Yes, please do go over FICO 10 and how it looks at installment account. Doesn't care about installment accounts. At least I don't think it does. I've gone through 10T, all the details a little while ago. I don't remember anything significant about installment accounts. Installment accounts are not really predictive of risk. I mean, you can have a car loan, you can have a home loan, you can have a personal loan. You could almost have an unlimited amount of debt on an installment loan. It's not really going to affect your score. It's the revolving credit. Revolving credit, I've always referred to it as the canary in the coal mine. Because what happens, what you see prior to people going into default, you see high credit card usage, you see late payments, you see people maxing out cards. This is a known fact, and it's been a known fact for decades. So in fact, I did a whole video on it. If you go into the coaching section, when I'm talking about credit cards and the king of credit. Credit cards is a measuring stick for where people are financially. And if people are going to go into default, it's almost always with the credit cards first. It's actually very common sense if you think about it. If I have credit card debt and if I don't pay it, nobody's coming to knock on my door to repo anything. It doesn't work that way. But if I stop making my car payment, if I stop making my mortgage payment or my rent, that's a problem. Okay, that's a collateralized asset. They can come take away my car. They can evict me out of my house. But credit card debt, what's the worst case scenario? I'm going to get some phone calls, and I mean, obviously aside from the credit report being damaged, but there's not really a lot of risk of something being taken away from me. So that's why credit cards are so important. Okay, let's see, where am I? Crystal, hi Crystal. What about hospital bills that you didn't agree? Third-party reporting. I'm not exactly sure what you mean by didn't agree. Are we talking about collection accounts? And if that's the case, our agreement as consumers really doesn't have anything to do with how things are being reported. We don't have any say. We can't call up the bureaus and say, hey, okay, listen, man, I don't want you to report any of my stuff anymore. I want you to kill my credit report. We don't have the right to do that. Okay, Crystal, so yes, collections. So yeah, it's a debt. Now, if you disagree with the debt, then you're going to have to negotiate that with your insurance company if you had insurance. If you don't, then it's something that you're going to that's a debt that was incurred by whatever hospital bill or hospital procedure that was done. But your agreement to it really doesn't have anything to do with the reporting side. If you have a disagreement about the dollar amount or that the debt is legitimate, really that's best to deal with the hospital itself and see if you can settle it there. Now, having said that, you can always dispute it on the credit report. Medical collections, I mean, you might have a high chance of getting it deleted, but it doesn't mean that the debt goes away. I mean, they could possibly sell it to another credit repair company. It happens. I mean, I'm sorry, another collection company. It happens. But a lot of times it's best to try to work that out with whoever the hospital is, if you can. Okay, hope that answers your question. If you want me to elaborate more, then feel free to put in a comment. Okay, Keithlin, I'm in the process of disputing some medical bills, and I just sent off round 2 last week. How long can I dispute them if it's not deleted or resolved on my next round? Okay, great question. 4 rounds is about as far as you're going to go, until you just run out of stuff to dispute. So the way the dispute works is when you send in a dispute, By law, they have to perform what's called a reasonable investigation. Reasonable investigation. That's in the Fair Credit Reporting Act. With a collection company, they also have to comply with what's called the FDCPA. It's the Fair Debt Collection Practices Act. So they have to jump through some extra hoops to verify the debt. They have to have a chain of ownership. They have to show that they have a legal right to collect, and they can't always do that. Normally, by the time you get to about round 4, round 5, if an account can be deleted, it's been deleted. If it's still there, it means it's in compliance with the law, and there it will stay. You have some other options. You can you can wait 6 months and dispute it again. Maybe things change. Maybe they archive the data. Who knows? Or you can settle the debt. It's always one of the things you'll always hear me say. If you have a debt, if you owe the money, you know it's yours, you know the balance is right, settle it. Do the right thing, settle it. I mean, I understand that not everybody's in that situation, okay? No problem there, I get it. But if you have the funds, if you are trying to move forward with your life, settle the debt. A zero balance is better than having a balance. You end that very adversarial relationship and sometimes risky relationship with a collection company. You don't want to get a knock on the door one day and they decide to serve you papers to sue you. Happens. I don't want to scare you, but it's a possibility. And when I say settle, I don't necessarily mean you've got to settle for full price. I mean, if I had a $5,000 collection, I'd call them up and say, listen, I got $1,500. Let's make this happen. Because they probably bought it for pennies on the dollar. Or if the debt is assigned to them, if they're just if they're a company that collects debt on behalf of a company, then they get a percentage of what they collect. And who knows what that original creditor is going to be satisfied with. But start low. No reason to not lowball them. They're not going to hang up. They're not going to get upset with you. They're going to come up at a higher number than negotiated. And try to get that zero balance if you can. Now, it's not going to come off the credit report unless you try to do a pay for delete. Some collection companies will, some won't. If you pay it, you can always swing back around 30, 60 days later and do a dispute. A lot of time you can get a deletion after you've paid a collection because they just don't want to deal with it. They don't want to have to spend time, energy, and money responding to a dispute, and the law says that they have to. Okay, very good. Let's see. Mary Angel, is pay for delete worth a try? Actually, it is. It's very much worth a try. You know what? I would have had a different answer to this about a year and a half ago. But before COVID, I would have had a different answer. Where a lot of collection companies will not do a pay for delete. It's actually right there in the CDIA manual. It's the Credit Data Industry Association. It's the Metro 2 book that tells collection companies and data furnishers how to report and what to do, what not to do. And inside, it tells them, do not remove information from a credit report in exchange for payment. Now, original creditors won't do that, like Citibank, Cap One, Amex. I've never heard a story of them removing something in exchange for payment. But collection companies oftentimes will. They just, for whatever reason, they're willing to bend the rules a little bit to get paid. So, yeah, Mary, there's nothing wrong with calling them up and say, hey, 20 cents on the dollar, 15 cents on the dollar. Worst case scenario is they're going to negotiate with you. And then, by the way, let me give you a little tip on this. If you're going to ask them to do a pay for delete, make sure please get that in writing first. I've been doing this a long time. I've had tens of thousands of conversations with people about their credit, about the dispute process. And I can't tell you how many people I've talked to that said, well, the collection company said they'd delete it. Well, did you get it in writing ahead of time? No. Well, there you go. You have to get this stuff in writing. And also to be very attentive with the language that they use. So, we'll role play this a little bit. Let's say that you're on the phone with me. I'm the collection company. And I say, okay, you know what? Yes, if you pay it, we're going to take care of that balance. Okay, we're going to remove that balance from your credit report. Okay, now I hope you heard it. Did I say I'm going to remove the account from the credit report? No. I said I'm going to remove the balance. Well, what does that mean? Oh, I'm going to take that $500 that you owe. I'm going to remove that and replace it with a zero. But did I say I'm going to remove the account? A lot of people hear what they want to hear in that situation. I can't tell you how many times I've heard this story. Like, well, they told me they were going to remove the balance. Okay, well, they did, but the account is still there. Now, Um, Let me tell you something about paying a balance on a collection, and this goes for like is it Adrian? No, I'm sorry, I'm calling you Adrian. It's Arian. I'm not sure how to pronounce your name. I'm sorry. And a couple other people asked about the contemporary models of FICO, FICO 9, FICO 10, 10T, also Vantage 3 and Vantage 4. These are referred to as contemporary scoring models. They're used. Uh, they're relatively new, but one of the very important things about them is they ignore balances of paid collections. Okay, this is a big deal. So if you're going to get a car loan or a credit card, and they're looking at a FICO model 8 or 9 or 10, it's out. I don't know if anybody's using it, but it's out there. If you paid a collection and they wouldn't delete it for you, it's going to get ignored by the by FICO and by Vantage because it's going to ignore that zero balance collection. Okay, so where are we right now with time? Boy, we're really carrying on here. 43 minutes in. Love it today. There's a little over 25 people watching, so I like to see the channels growing a little bit. Are there any other questions? Did I miss anybody? Is there something that you would like me to elaborate on? If not, I'm going to finish up with another conversation I had today about charge-offs. And I did talk about it a little bit. Somebody asked me if it was better to, what was worse, a close at Grantor's, close by the Grantor, or charge-off. And of course, charge-off is the way that you don't want to go. But on a charge-off, one of the things that I get asked a lot is, hey, if I pay it off, is it going to improve my credit? And again, not unless it's a contemporary scoring model. So in contemporary scoring models, in fact, now that I'm talking about it, I realize I pretty much covered all of this already through the course of this live. But to finish this up, on a charge-off account, it doesn't matter if it has a balance or a dollar amount on it on older scoring models. So if you pay a charge-off account, if you're looking at buying a home, it's not really going to help you. If you pay off a collection account and you're buying a home, because home loans, when you do a mortgage, it's a much older version of FICO. This is a requirement under FHFA. So these are 20-year-old FICO models, and unfortunately, they really aren't as sophisticated at assessing risk, but it's mandated by the government. So just bear in mind, if you do have charge-offs or collections, your underwriter might make you pay those if you're in the market for buying a home. And if you are, let me know. We've got some more great content on preparing your credit for buying a home. But just bear in mind that there really is no big point advantage. There's nothing really to be gained by paying a collection or a charge-off for score-wise anyway when you're looking to buy a home. Okay, let's see. I think I got everybody. A lot of people on, not a lot of questions right now. So if anybody's got a question, please let me know. Otherwise, we're going to wrap it up right now. So next week, I will be on again with John Olsheimer. If you've not been on with John, he's a lot of fun to talk to. 30 years in the credit industry. He spent several years at FICO, several years at Equifax. And what makes this guy so knowledgeable is he is the #1 retained expert witness in the court system. So he's qualified to testify in federal and state court as a credit expert witness. The guy has an encyclopedic knowledge on how every minute little thing in credit works. So it's really fascinating. Even when I'm on him, as much as I know about credit, I always usually learn something new myself, so it's fun. Okay, Joseph and Deshaun, looks like we still got a couple questions. So I use Credit Versio since February. I need better scores. What info do you have to increase scores for mortgage? Great question, Joseph. Go into, are you on Facebook? Okay, go onto our YouTube page. On our YouTube page, just put in there Credit Versio. It'll come right up. There's credit coaching. And in there, it explains what to do, what not to do, just to improve your score overall. And then in the next couple of days, I'm going to be posting an article of how to prepare your credit for the mortgage process. So you'll see that at creditversio.com under what is it? Credit education. So it's on the main page, not in your Credit Versio account, not in your portal, but right on creditversio.com is where we put a lot of videos and a lot of articles that myself and John and others create for you. Deshaun, in the market for buying a home, information, same thing applies, Deshaun. And great job. It's exciting getting a home. I know prices are pretty high right now, but interest rates are really, really low. So it's definitely worth it for a lot of people. Emanuel, I still want merchandise. Okay, we'll see what we can do about that. Dita, okay, how do I handle a repo? It's a joint account. Is it best to just settle it? Yeah, actually, you can always dispute a repo. I mean, you can dispute anything you want. It's your legal right. And it's really an unfortunate situation when it's a joint account. What you want to do is try to settle it again, just like anything else, settle it for less than what's owed. It's a debt account. If they grab the car from you already, which I'm sure they did, usually there's a balance because they send it off to auction, and for whatever reason, they always get less than what the loan amount is. It's called a deficiency balance. That's what you see on a repo. And yeah, if you don't want it to escalate into something really serious, I'm not saying they're going to sue you. I'm just saying that creditors have an option to reclaim money in the courts, and you don't want that. If it gets to that point, if somebody comes knocking on the door and serves you with papers, it's never a good thing. Jump on the phone, see if you can sort it out with them, and then after you do that, if you want to swing back around and dispute it, a good portion of the time you can get a deletion simply because they're going to get this dispute letter about the repossession, and a lot of times, if they got their money, if they're satisfied, there's like a wink and a nod. They know what you're doing. They know you're trying to get it deleted from the credit report, and sometimes they'll oblige you. Okay. Thank you so much for joining me today. It's been a great Facebook Live. A lot of people on here. If you're watching this in the replay, please post your questions. I get alerts all day long when people post questions from these videos, and I'm more than happy to answer them. So thank you again. I will see you on the next Facebook Live. That'll be 6 p.m. Eastern Time. And next time I will have John Alzheimer with me. Thanks again, and we will see